One rental at a time. We are back. It is Sunday, October 30th. Yes, I enjoyed my first 2 days off from doing any live recordings. Hopefully you've had time to check out other videos on my channel because we have, 8,000 or so to pick from. So hope you've enjoyed that. Couple of quick things. I bet many of you knew, many of you expected me to sneak some stuff in because I am frankly broken. If you pay attention on my channel, there is a tab called Community. What I did for you on Friday and Saturday morning is I posted my raw notes. Folks, I've been looking at the financial markets for about 30 years. The only thing I've tweaked a little bit is taking some notes. So I will not leave you hanging. I will take a few minutes on Friday and Saturday mornings to post my raw notes. It obviously won't have any video. It won't have any color behind it. But yes, I just do what I do, and I thought it would be nice. So I think you might have to be subscribed to my channel. I'm not sure how all of this works. But yes, I did put out raw notes, or a post, I guess you would call it, Saturday morning, or Friday morning and Saturday morning. I will attempt to get it done about 7:30. You can feel good about it being done by 8 a.m. So if you want to know what I'm thinking when I'm reading, you can find Friday and Saturday my community notes. Hopefully you enjoyed that. Hopefully that was a pleasant surprise. Thank you for all the nice notes. I did enjoy the time. We went down to Santa Barbara. And something else, in the community posts, I will attach a picture just to show you some things that we are doing. So hopefully you get to know me more. I get to know you more. And we just keep this thing rolling. Like, subscribe, comment, but let's get into it. So Friday's big news had to be pending home sales. If you've been watching this channel, you know that I expected pending home sales to be a disaster. Expectations were for a 4% decline. I thought we would be more like 8 or 9. We were even worse than I expected. We were down 10.2%. So new construction is now down, 17.6%. We now have existing home sales down 30%. Both are things that we've called, and I would argue, exactly what the Fed wants. The Fed wants to break the housing market. And gosh darn it, they are breaking the housing market. The housing market is already in a recession, and I would argue the housing market is headed to a depression. Let's jump ahead to this right here. Remember, housing makes up about 13% of GDP. On Thursday, we talked about GDP being 2.6%. Did you know it would have been 3.9% if housing was a zero? If housing didn't go up or down, the housing market wasn't in a depression. Residential investment was down 26.4%. Now, what is residential investment? That's a big bucket of stuff. It is made up of housing. New home building, residential investment. Housing sales, transactions, residential investment. Also remodeling, residential investment. Again, it was down 26.4%. The Fed did that. The Fed is trying to break the housing market, and I would argue they're being successful. It is going to be a rough winter. But thankfully, I think we have found like max pain. The pivot from buyers to sellers, welcome to a buyer's market, is here. People are losing their minds. This is what we have been waiting for. Competition is leaving. Now you and I can go find motivated sellers. So again, GDP for Q3 was up 2.6. That number was mainly made up of the exports that we didn't have in Q1, Q2. Q1, Q2 were negative mainly because lack of exports. Now Q3 was positive because of exports. You smash that together, we're basically flat for the year. I want to call out residential investment one more time. It is getting worse. Housing will pull GDP negative in Q4, in my opinion, certainly in Q1 of next year. The Fed wants a recession. The Fed wants to hurt housing. Congratulations, you are getting what you want. And frankly, I'm excited for it because now it is time to go shopping, as the deal that I will close tomorrow on Monday is just an example of. So that was Friday. Saturday, when I look at my notes, it was really looking at big tech, right? Amazon disappoint, Meta disappoint, Google disappoint. The thing that I find myself asking is, will we have that time, much like the dot-com crash, where we have layoffs? Which of these providers will have big layoffs? My guess is Q1. And by big, I mean 10,000 plus. Not 300, not 1,000. We are talking 5 digits minimum. Let me know in the comments below. Who do you think has a monster layoff first? Amazon, Meta/Facebook, or Google? Let me know in the comments below. I would love to hear from you. Pretty interesting. On Saturday, I read an article about Intel. If you've been following Intel for a little while, you know they've been struggling. Intel just announced a $10 billion cost reduction by 2025. Hey, Kip, how you doing, buddy? Yes, smash that like button. I appreciate you, Kip. Thank you very much. But yes, Intel, $10 billion cost reduction that will include plenty of layoffs. This is coming, right? There was a lot of extra hiring over the last couple of years. Companies need to reduce and move forward. Hence, my fear for months now of a white-collar-led recession, not blue-collar. On top of that, Musk closed Twitter. That was a big deal on Friday as well. So pretty interesting stuff. And then on Saturday, a couple of interesting companies to report next week. Tuesday, Uber and AMD. Uber will be interesting. It will be interesting because what is going on with their cost structure, but also rides. If we are really in a nasty recession, I expect Uber to disappoint. I think Uber will be one of those companies that kind of surprises us from left field with a bad number if the recession really gets teeth. Qualcomm on Wednesday, and then Thursday, Starbucks. Remember Starbucks about a year ago? Starbucks gave us our first little peek into China. Remember talking about, hey, if they're not buying their lattes, what are they doing? Starbucks was the first company to hint at the pain to come in China. So they could be one of the first companies to say good things. So I will be looking for Starbucks to see what is going on in China. I don't pretend to know the Chinese economy, but Starbucks will tell me if the Chinese consumer is spending again. Because again, about a year ago, they said they're not spending. PayPal, what is going on with PayPal? And then DoorDash. Again, Uber on Tuesday, DoorDash will be interesting. Are we going to restaurants versus ordering in? I think DoorDash could disappoint as well if we are getting into a recession. So that's Friday and Saturday. Fed 75 basis points Wednesday. Big economic decision on Wednesday. The 75 is baked in the cake. I think if they gave us 50, like Canada, like Australia, it would send the market to the moon. And I don't think Powell wants to do that. I don't think Powell wants to put the Fed put back on the table. I think Powell looks at the stock market going up 800 points on Friday is not a good thing. So I think we get 75. What is going to be interesting on Wednesday, and we will certainly talk about on Thursday, is their press conference. Both his prepared remarks and his questions. You and I want to know, are they almost done? You and I want to know, are they done with 75? The stock market wants them to be done with 75. If Powell gives any lip service to, you know what, we will slow down, we won't hit you with 75 in December, the market's going to go crazy. My opinion. And then, are they still looking at a raise in January or February? I think it's early February. For me, when I look at this, after Wednesday, we will be at 3.75 to 4. I am calling for a terminal rate of 5, meaning peak. Others are calling for a terminal rate of 4.5. We're almost done. I'm excited by this. We are almost done. The market is a forward-looking thing. We are almost done. The Fed is almost done. I am so excited about what is coming because, again, fear is dominating the market. Me, I'm like, gosh darn it, the Fed's almost done. We get to a baseline, time to rock and roll. I'm excited for what is coming because after Wednesday, whether it's 4.5 or 5, we are almost done, which I'm excited about. Also on Tuesday, this is a very important report. The JOLTS report. What the hell is the JOLTS reports? It's something like job openings. I don't know what it stands for, but whatever. Basically, this is the report last month that lost 1 million, I think it was 1.1 million job openings. This was the first indication that the Fed is winning. The Fed is causing pain. The Fed, in their warped sense of humor, could say, we did that. We caused 1.1 million job openings to disappear. We went from basically two jobs opens for every laid off to 1.6. The JOLTS report, will we see more job openings disappear? Again, remember, bad news is good news. Good news is bad news. I think the JOLTS report will show something like 6, 7, 800,000 jobs. Not really jobs, but job openings disappear. That's on Tuesday. Wednesday's the FOMC 75 plus press conference. Pay attention to the press conference. And then Friday, you and I are going to have an over-under. We do this all the time with economic numbers. Come join the party. The expectation is 200,000 jobs created in October. The expectation is the unemployment rate goes from 3.5 to 3.6. So, if you like to play along, you have two choices. One, you could just say over, under on the 200,000. 200,000 is the number. Do you want to take the over or the under? If you would like to play along with me and get a chance to win one of these free shirts, nailed it, guess a number. Pick a number, and if you get the number right, or you're clearly the closest, I will send you a shirt for free. Here is my guess. My guess is we disappoint. My guess is we come in at 189, and I wrote it down over there so I could see it. 189. We're going to disappoint, and again, remember, bad news is good news. We disappoint on Friday, the market goes crazy. It's a weird world, man. It just is. So again, guess, and if you're already guessing here live, you need to do me a favor and guess once I post the video, because if you're posting live, I don't actually ever see these comments. So once we're done, post again. I'm sorry. And let's get the comments going. So again, we've already talked about housing. Again, think about that. The housing market took 50% off of GDP. We would have almost been 4%. Housing pulled GDP down by 1.37%. Thank you, Jerome Powell. But oh, by the way, he has to do it. He's causing pain. New construction down 17%. Existing home sales down 30%. Remodeling slowed. We're almost done. We've almost gotten to the floor. I'm excited. Cardone, the good old Grant Cardone, Mr. 10X himself. He was actually featured in an article that I read, and he talked about where the average person, that's you and me, where you and I struggle. 1, discipline. If you watch my channel, you know that rule number 1 is focus. Rule number 2 is daily discipline. Get your buy box. Look at your buy box. Don't be distracted. I agree. A lot of the people that I interact with, you are all over the place still. Get a buy box. Get your daily disciplines. See what's going on. Learn your market. Stop gambling. Number 2, patience. Patience. I agree with Grant on this one also. We all want it yesterday. We all live in a microwave society. Wealth in real estate is built over time. Do the work. Daily discipline. Only great deals. Make the next deal better than the last. And as we've talked about, it takes time for this engine to keep going. And then finally, not thinking big enough. This is my weakness. This is my kryptonite. I don't think big. I think it is one of my, at least in the entrepreneur or business world, it is something that I struggle with. I admittedly don't think big enough. I enjoy doing the work that I don't, it's very uncomfortable for me to do what other people call think big. So I admit that is a weakness of mine as well. And then finally, if you are looking to get a side hustle going, if you are looking to do anything on social media, I recommend a new channel that I'm in love with. I watched this channel for hours the last couple of days. Remember, I took a couple of days off, but I watched this channel for hours yesterday. Think Media Podcast. Think Media Podcast. Sean Cannell, he's created a couple of books, YouTube Secrets, and I think YouTube Secrets 2, version 2 is out now. If you are looking to get started on YouTube, be a creator, be an influencer, be whatever. I have enjoyed, I must have listened to 8 hours of Think Media Podcasts. So again, a lot of you ask me about creating content and where to go. I suggest going to Think Media Podcast. Great channel. I don't know how I didn't find it earlier, but just wow. Great job. So lastly, I want to close on this. 2023. 2023, again, is going to be a tough year. All recessions are tough. All bear markets are tough. But I have to ask you, have you, your friends, or your social media feed already given up on 2023? I cannot believe the number of people that I'm seeing saying, I'm going to wait. I'm going to sit back. You're just going to be, you're going to cower. This is the time to do the work. Wealth is made in recessions. This is why doing the work matters. You build confidence in yourself. This is why, if you're lucky enough to be one of my students, you have to be in the Facebook group. My Facebook group, just in the last week or so, people are posting what they're doing and winning, and all. Just the energy of being positive is amazing. You need that. Run away. Cut off negative people. And that includes your social media feed. If you guys are still watching all that scary stuff, stop. We are currently at 3.5% unemployment. We might double and go to 7%. That's still 93% employed. We are at crazy interest rates, but we could be almost done. We have sellers that are motivated. Go get some. You have been begging for a buyer's market. Well, congratulations, they're here. You have been begging for less competition. Congratulations, it's here. Now do the work. Just do the work. Watch 20 minutes a day. Get a buy box. Document what's going on. Learn what average is so you can do good or great. It's that easy. If you don't want to do real estate, do stocks. You don't want to do stocks, do crypto. I don't care. Do your thing. This is the time. Do your thing. All right, folks, I hope you have an amazing day. Remember, leave a guess below if you want to get one of these awesome shirts. Yeah, the first person to get the number right on Friday, jobs created, I'm going to guess 189. If you just want to do over under, it's 200. Feel free, guess below, and we'll give away a shirt at the end of the week. Take care. Bye-bye.